What's going on, guys? My name is Philip Bangley. Welcome to our channel, FxProNow, and welcome to session number 1. What we're going to be talking about right now is the basics when it comes to getting into the world of Forex and learning Forex and learning how to trade Forex, how to buy, how to sell, what lots are, what pips are, what risk management is, and what it should be, and also how you can be able to grow your account over time, slowly but surely. And I would definitely suggest slowly but surely. So what we're going to do is I'm going to share my screen the majority of the time. You won't be able to see my face. If you have any questions, go ahead and write a comment below. Don't wait to write the comment at the end of the video. Just write it right away, and from there I can be able to actually help you out right away. All right. So the way that this works when it comes to this world of learning trading and stuff like that, you're mostly going to be buying, selling, and just looking for opportunities to be able to. Oh my God. To be able to actually get into the markets. Let me show you my phone real quick. This is gonna be so crazy. Check this out. Check this out. Can you see this? I don't know if you can see this yet. Oh, you can't see it yet. Right, check this out. And this is not enticing or anything like that. I'm just showing you what my phone looks like right now. Isn't that crazy? I'm just gonna close this out. All right, so what we're going to be doing is we're going to be talking about how to buy, sell, and how to what do you call it? How to buy, sell, do this thing called risk management, and figure out pips and lot size and stuff like that. But just know that this is a very simple game once you really understand it. Now, one thing that I would definitely let you know is the fact that this is going to take up a lot of your patience, and at the same time, what it also I'll definitely let you know is the fact that if your bank balance is going to be based upon not just the skill that you know, but how you control your emotions. I promise you that's the biggest thing. All right, so let's just say that you are a part of our company, right? And the company that I'm partnered with is called iMarkets Live. If you're on here for the very first time, somebody invited you on here, I would definitely suggest at the end of the video, go ahead and let them know, hey, listen, I want to know more, and then they can be able to give you more. What I'm going to do right now is going to kind of give you like an insight of what the company can be able to do when you're a part of it. Because what they'll do is they'll actually send you trades. So you can be able to actually make money without even really understanding the game, at least in the beginning. But the main goal is to really understand this game of Forex. Okay, so let's say there's a trade that's sent out to you that says something along the lines of buy. Let's see, buy USD CAD. Right? Let's say it says something along the lines of buy USD CAD now. Right? Now, what does that mean? What's happening is you're buying. You're going from essentially you're going from Canadian dollars to US dollars. So you're buying the US dollar, expecting the US dollar to go up, and expecting the Canadian dollar to go down. Okay, it's just like buying. It's just like taking some money and some whatever money. It doesn't even matter. Any money, and buying a house. right? Now that house goes up in value, and then let's say it goes up in value $100,000. Let's say you have $100,000 cash. This is how this works. I think this is the easiest way I can put it. Let's say you have $100,000 in cash, right? And then you buy a house for that 100,000. Okay. Now that house, let's just say, goes up in value $50,000 because there's a school that's built next to it. There's a mall, and a whole bunch of other stuff that's built next to it. And then from there, you convert it back to cash. Now you have $150,000. It's not like you did any work. It's just the value. Value changed. That's it. That's all that happened, right? So the same thing happens here. The same thing happens here with the US dollar and the Canadian dollar. What you did was you expected that the Canadian dollar is going to lose value, or the US dollar is just going to be more valuable right now than the Canadian dollar. So you go from the Canadian dollar to the US dollar. You expect the US dollar to go up, so you're buying US dollars, right? And the Canadian dollar will go down, or just be less valuable than the US dollar. That's literally what it is, right? So now, let's just say, with that being said, what happens is, can't wait. Hey, what's going on, Gio? Congrats for what? What happened? So, let's just say that there's a trade that's sent out that says TP number one, meaning take profit number one, right? And what that means is, and I'll explain to you, right? And then from there, let's say it says TP number one is 10 pips from entry, right? I'm going to explain to you what that means, right? Let's say the second trade that says something along the lines of TP number two is, let me find something that makes sense. TP number two is 1.32594. I don't know, something like that, right? Now, what's happening is, let's just say that let's say that TP number two is green and TP number one is this blue right here, right? And you're entering at this black. Okay, so this is where you're entering. This is where price is currently. Let's say price currently is 1.28954, something like that. And you expect price to go up to that 1.32 area, right? 1.32 dot dot dot, right? You expect the price to go to that 1.3594 area, right? Now, what's going to happen is price is going to go up, right? Now, you don't know if price is going to go all the way up to that point. So what you'll do is you'll probably set up what we call take profits in between, right? And this would be like a checkpoint where if price doesn't go all the way up to this area right here, well, you could probably just secure some profits right there. Right? So what happens is you're going to enter in your trade, right? Both at the same time. You're going to get into two separate trades at the same time. Now, both of these are going to be moving at the same exact time as price moves up, right? They're going to be moving at the same exact time, right? Now, the green one is going to pass that take profit, but the blue one will close out right there, and you'll earn whatever profits are from here, well, from down here to up here. You'll earn that profit, right? Which is the change. The same thing as the house. You know, you just sold the house at that point, right? Now, what happens is the other one is going to continue. Now, sometimes it may not go all the way up there. It may start heading on the downside, and then you can be able to manually close that by yourself, and then you'll earn whatever profits from here to here. The same exact way as the value of the house went up, and then it started going down, and then you just wanted to sell it right away. Right, so that's how this works. What I would definitely suggest is anytime that a trade is sent out to you, get in right away. Don't wait, especially if you trust the person that's actually sending out that trade. All right, so now you just got that trade, and what do you do? How do you get in? Right, how do I get in? Well, I'm going to show you right now. So the first thing that you're going to want to do is you're going to want to download this application called MetaTrader 4. Now, MetaTrader 4 is a very, very simple application that you can be able to use, right? And this application here can be downloaded on any device or anything like that, right? Then it's this one right here, MetaTrader 4. And from there, you'll see a couple different pairs that are up here, right? And what you can be able to do is you're going to want to find the pair that you're supposed to be getting into. So USD CAD, right? You click it and then click where it says trade. Now, what you want to do is you want to make sure two things. You want to make sure that you are in the right pair. You want to make sure that you are using what we call market execution, meaning you're executing your trade at the market price, which is right here or right there. Okay. Now, also, you're going to want to make sure that this number right here is correct. This is what we call lot size. I'm going to go more in depth on that later on. Now, what you're going to want to do right now is get in where it says buy by market. And being the fact that we are supposed to be getting into two separate trades because we have two separate take profits, I'm going to get into a second trade right now. So I got into two separate trades. Now, the number that's to the left of the arrow is always what we call our entry price, right? And we got two separate trades, so we have two separate entry prices. The faster that you get in on both, the better over time, and you'll see. And as you can see here, how these numbers are changing, this is what the current market value is currently. So it's changing over time, right? And right now, you'll see that there's a negative price right there, and that's okay. What the broker does in the beginning is they take their fees from the beginning, and then from there, you'll just make up the difference as time goes by, as it goes into profit and stuff like that. All right, so this is how it goes. So what I want to do is I now want to write down my first entry price. So this 1.28277, right? So let's write that down. I'm gonna take off this take profit number 2 thing. Just remember it's 1.325954. Okay. So my entry price, so entry is the entry that we got right there is 1.28277. Right. So the number that's all the way to the right here, this number right there, is just too small. So we're gonna act like it doesn't really exist. Now this number right here is what we call the single digit pip. Why? Because it moves like this. It moves like 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then it moves this number 10. It moves like this: 0, 10, 20, 30, 40, 50, 60, 70, 80, 90, and then it moves this number 100 digit pips. Okay, so it moves obviously 0, 10, 20, 0, 100, 200, 300, 400, 500. So these are the numbers that we're going to really pay attention to the most, right? Those two right here. Now, let's say that you're looking at a different pair and you didn't really catch what I was saying just now. Well, the app literally makes it simple for you. And you can be able to go to the quotes area at the bottom, right? And then if you go to where it says advanced, it may start off with simple. Go to where it says advanced, and then from there, you're going to see small numbers, the numbers that don't really matter too much. And then you're going to see the larger numbers. So this right here is a single digit pip, and this right here is a 10-digit pip. Same thing here, here, here. Now, you're probably wondering, okay, cool, I got it. Well, I'll put it to you like this. Anytime that you see a JPY, or sometimes something different, you'll see the fact that JPY is 113 point something something something. Well, NZD USD is 0.650. This is 1.29 some. So they're all different. Not all, but most of them are different. And so that's why I kind of go over this just a little bit. All right. So let's continue. So now, being the fact that we have that, what I want to do now is I want to find out, okay, what's 10 pips from my entry price? Well, if that's the entry price that we got into, the 1.28277, right? Well, what I want to do is I want to figure out what the 10 pips from entry is. Well, first of all, this right here is my entry, right? My entry. Now, my entry, being the fact that I want to buy, I expect prices to go up. So my take profit is going to be above my entry price. How much do I want it to be over? Well, 10 pips. Okay. Now you see this 1.28277. Well, I expect price to go up. How much do I want it to go up? Again, 10 pips. And which are the numbers that we're going to pay attention to? These. What I'm going to do is I'm just literally going to add 10 to that 27 right there. Right? Now, obviously, what is that number? So our take profit is, all I'm going to do is add 10 to that 27. So what's 10 plus 27? 37. Right? And I'll just write out the entire number now. 1.2837. And then I'm just going to add the last 7 in. Okay? Even though it doesn't matter, but sometimes it kind of does. All right? So now we're going to figure out this thing called a stop loss. Now, a stop loss is going to be the opposite of a take profit. Sometimes, it's going to be going in the direction that you want, but sometimes it doesn't. So what you want to do is you want to make sure that you secure your profits. Okay. All right. You want to secure your profits, and also you want to make sure that you secure your account so that it doesn't go in the opposite direction. So let's say you don't want it to go 20 pips backwards. So what I'll do is I'll literally just subtract 20 from that 27. So what's that? 7. And I'll just write down the entire number. 1.28077. All I did was take away 20 from that 27. Okay. So in my opinion, I think this picture right here really does a lot of makes things very, very simple. If you want more content, just go to FxProNow.com or just follow us on YouTube, and you can be able to get all that over and over and over. All right, so go ahead and take a screenshot, picture, whatever it is you need to do. All right, screenshot, picture, and then we're going to go over to cells. Okay. Then we're going to go over to cells. Mind you, Geo, this is how I share the idea with peeps, as opposed to doing the traditional presentation. So Geo, when I have that 20, it's literally just for example. Just for example. I'm just picking out a number to do an example for this, okay? All right, so hopefully you got that down. All right, so now I'm gonna do a sell. All right, so let's just say there's a trade that's sent out to you that says something along the lines of sell GBPJPY now. Right, and let's say it only says one take profit, and it only says take profit is 10 pips from entry as well. Now, what I'm going to do is the same exact thing. I'm going to go to my phone. I'm going to find GBP, JPY. I don't know why I don't have that one. X crosses. No, it's not a cross. It is a cross. JPY. And there it is. I can move them. which is really cool. Right. And then what I'm going to do is I'm going to find that GBP JPY. Go ahead and click that, and then click where it says trade. Right. And then from there, all I'm going to do is click where it says sell by market. Now I got into my sell. So what's the number that we pay attention to when it comes to our entry price? Always to the left side of the arrow. So 147.337. So I'm going to write that number down. 147.337. Okay. Now what's the number that we don't pay attention to? That one. The single digit pips, that one. 10 digit pips, that one. Okay. Now, what I'm going to do is I'm going to figure out, okay, when it comes to a sell, now what I'm doing is I'm going from the pounds to the yen. I believe that the yen is going to go up in value, and I believe that the Great British Pound is going to go down in value compared to those compared to those Japanese yen. So essentially, I'll actually make money when the price goes down, which is really, really cool. So my entry price, my take profit is going to be below my entry price. How much do I want it to be below? 10 pips. Okay. These are numbers that we pay attention to. Subtract 10 this time. 147.237. That's our take profit. Our stop loss. Again, I'm picking some random number. Let's say 30 pips. It's a random number for our stop loss. All right. So what I'm going to do is now add 30. 147.637. And then what I'll do is I'll literally just take that, take these numbers right here, and then from there, I'll just put them in my phone. All right, so go ahead and take a picture of that. I'm pretty sure this picture right here would definitely help you out. Again, if you need any more info, FxProNow.com will be able to help you out. All right. Go ahead and take that picture. I'm about to erase it right now. 5, 4, 3, 2, 1. All right, now what I'm going to talk about is this thing called risk management. Okay, risk management. So, oh no, I'm going to talk about lots actually. All right, for your notes, lot. So here's the thing: when it comes to the lot size is all dependent upon your account balance, right? The higher your account balance, the higher lot that you can be able to get into. Yeah. So, let's say for GBP JPY, right? The smallest lot size I can be able to get into is this one right here, right? 0.01. I can go click sell by market, and what you'll see is the fact that this will be moving in pennies. Okay, see how it's moving in pennies, right? And then let's say I did this one, 0.10 sell, and you're going to see this is going to be moving by tens of pennies, 10 cents each. It's going to be moving. Move. Right now, this is what we call a standard lot. It's going to be moving by dollars. Standard lot, it's going to be moving by dollars. This is a 10 lot. It's going to be moving by tens of dollars. And then this is the 100 lot. It's going to be moving by hundreds of dollars. Okay. And you'll see that the banks mostly use, these higher lot sizes and stuff like that, right? So you only need $10 to move in the markets to actually get into this lot size, $100 to be in this lot size, $1,000 to be in this lot size, 10,000 to be in this lot size, and then 100 grand to be in this lot size, and you'll be able to build it up. because as you can see here, these numbers are moving fairly quickly, and being the fact these numbers are moving fairly quickly, you could be able to actually, get into a profit, take out your money, and then do another one and do another one, go into higher lot size, higher lot size, higher lot size. But just take your time when it comes to going up in lot size over time. Okay, so that's that. So let's go more in depth on this. 0.01 is the smallest lot size you can be able to get into. Okay, 0.01. When that moves 10 pips, it's moving plus or minus $1. Okay, that moves 10 pips. That is moving plus or minus $10. When this is moving 10 pips, that is moving plus or minus, how much do you think? I'll get back to that one. Let me know what you think. 10 pips, this is moving, how much do you think? And this right here, 10 pips, how much do you think? Okay. Let me know in the chat box. So the first one is $100, second one $1,000, and the last one $10,000. Okay, good. All right. So what I've realized is the fact that yes, you could be able to make a bunch of money in this game. Hell yeah, boy. You could be able to make a whole bunch of money in this game. That's true. Now what I've also realized is the fact that this never changes. That's what caught my attention. The fact that literally you could be able to start out with, let's just say, and the higher balance that you start out with, say you start out with $1,000 in your account, and you're at a one lot. With that $1,000 in your account, when you make 10 pips, you're making $100. Now, how quickly can one be able to actually go ahead and get 10 pips? Well, let me show you real quick. I deleted some stuff from my computer, so it's moving faster, thank God. All right, look at this. Mind you, I called out this trade on Sundays this week in the market. It wicked, just wicked, and I said, hey, listen, it's going to wick, and it did. It was unfortunate, but then what happened? Boom, exactly to the T. To the T. My stop loss should have really been up here, but I knew that people, actually, let me not move that so you guys can be able to see. So I did get into the sell again because I just knew, and I knew this was some stupid thing. But we're up, good amount of pips right now, dude, right now. Let me see how much. 113, boy. All right, stop talking. So let's just say, in 1 hour, how many pips can the market move? Well, let's go ahead and take this candle right here, the long candle right here. This candle moved 67 pips in 1 hour. Okay, so let's do the do this long one, and then I'm going to do a short one, so you'll be able to see what's possible on each. Okay, so 67 pips. So with that being the case, 67 pips. 67 pips in 1 hour. If this is 10 pips, and this is what you could make, just imagine 67. That'd be $670, right, in that 1 hour, which is beautiful. Okay, and it's not like, oh, like that can happen to me. It's happened to me. So if it can happen to me, it can happen to you as well. Okay, so that's that. Now let's look at a shorter one. You're probably thinking, oh, that's not possible for me. Well, what about a shorter one? Let's look at this one. This smaller one right here. How many pips? 9.5. Let's round it to 10. So with that being the case, $100 in that 1 hour. Who do you know that makes $100 in an hour? And then ask yourself this question: how long and how much work did it take them to actually get to the point where they could be able to make that $100 in an hour? You know, so if you could be able to just save up 10% of your check every single month and just put it into your trading account, in my opinion, I think you could be able to actually grow an account over time. By trading it, also funding it, trading it, funding it, trading it, funding it every single month, every single 2 weeks or a week, whatever you get a paycheck. And now let's say you made $670. Now you have more money in your account, and the more money you have in your account, the higher lot size you can get into. The higher lot size, the more money you can be able to make based upon your lot size. But being the fact that you can just make 10 pips over and over and over and over and over time, and in session number 2, I'm going to show you how simple that could be able to be make those 10 pips. Is crazy. The only difference between somebody that's new, somebody that's old, somebody that's making money, and somebody that's not making money is 2 things: time and the person themselves, their thinking. So the most important thing that I would definitely do is get good at being patient and get good at controlling your emotions. I promise you that's what it's about. So go ahead and buy that book right now. Think and Grow Rich. If anything, let me just show you the exact one to get. Think and Grow Rich. I promise you, this is a big deal. All right, so just go ahead and buy that book. If you need the link, just let me know. But it's this specific one, just pretty. Right? Go ahead and buy that book right now, right now. And if you read it already, cool, read it again. All right. So that's that. Go ahead and take a picture of this, even though it's kind of sloppy. And then we're going to talk about risk management. After we talk about risk management, I'm going to go to what I call session number 2. And session number 2 is, in my opinion, one of the simplest ways to be able to grow an account over time. Now we're going to talk about the most important thing, which is risk management. Risk management. Okay. So the risk management that I personally follow is what we call 2% risk management. If you have a low balance, it's kind of hard to use a 2% risk management. The higher balance that you have, the less risk you need to take upon your account. Because the thing is, if you have like 10 grand in your account and you're risking 2%, you still are at a good lot size where you can be able to, make some good money, right? But if you only have $100 in your account, 2% risk management, it's going to piss you off, and you're going to try to get more faster, and it's not even necessary. Just take your time, right? So let's just say that you have $1,000 in your account, right? And your stop loss is 10, right? This all matters, okay? 2% of your account size is $1,000, and your stop loss is 10, right? So for every $1,000 that you have in your account, the highest lot size that I would do is a 0.2, okay? Highest lot size is a 0.2. Now, why wouldn't I do anything higher than that? Because if I did a 0.2 and that, and a trade went the wrong direction, right? And it went in the wrong direction 10 pips, you're only losing $20. You're only losing $20. This went in the wrong direction. So 10 pips, you're only losing $20. Now let's say that if you're in a higher lot size, like a 2 lot size, and you went the same 10 pips, well, you'd be losing $200. Now you have $800 in your account. And you know how much work you're going to have to do to get it back to $1,000? A lot. What the heck? Why does it do that? It's going to be a lot of work to go and I don't know what just happened. What the heck? I don't even know how to put it back. All right, anyways, I guess we're doing it sideways now. And it's going slow. What the heck? New sketch. All right, let's start over. So, what is this? Risk management. I don't know why it does that. So, risk management. Okay. So, for every $1,000 you have in your account, high slot size 0.2, right? 0.2. For every $100, it's a 0.02. And then for every $50, it's a 0.01. So let's just say you had in your account $2,550 in your account. Let's say 60. $2,560 in your account. Well, remember, for every $1,000 you have in your account, you do a 0.2. Well, you have two 1,000s, so it's going to be 0.2 times 2. And then for every $100 we have in your account, you do a 0.2. Well, we have 5 hundreds, so it's going to be 0.02 times 5. And then for every $50 we have in your account, 0.01. Well, we have only one of those 50s. Okay, so if I was to add that all up together, it's going to be 0.4 equals 0.1, and then equals 0.01. So all that equals 0.61. Okay. I have a formula that you can be able to use that'll make it actually easier. Kind of. Right? Let's say this is the formula. So the way that you do it is you take your account balance over 100. You take your account balance divided by 100. Multiply your risk management. So in this case, the risk management is 0.02. So you find this one out first. You do this first. Then you do this. Right? And then what's important is your stop loss is probably different. Right? It's probably different from 10. Right? So let's say your stop loss is 20. Then you do 20 with what I'm about to show you. Then what you're going to do is you're going to divide whatever number that you come up with. By this, your stop loss over 10. And that's going to equal your lot size. I know that's probably like, what the hell did he just say? If you're not really into numbers and stuff like that. It's not really that important. But it's just to get really specific. Okay. I think there's a website that does this for you. Size calculator. Let's see. Yeah, so on myfxbook.com, there's this thing called position size calculator, and then it literally does it for you. Count size, 1,000, ratio, 2, stop loss, 10. Put in your pair, and then you calculate, and then it's going to give you, whatever. All right. So that's how that goes. Let's say again, from what I put, 2,000 right here, and then there that is. Oh, did I add it wrong? Oh yeah, it's supposed to be 5. 4 plus 1 equals 5. 5.1. Same thing. Same thing we have here. Okay. So that's that. All right. I usually do a second example, but I don't have time. Let me just do it real quick. So let's say if you had $650 in your account, right? So you're gonna take that 100. What the heck is my mouse? Take that 100. It's supposed to be 100, so it's gonna be 0.02. 0.02 times 3 equals 0.06, and then you have a 50, right? So it's 0.01 times 1, because you only have 150, right? Equals 0.01, and then that equals 0.07. Or you can go to this, if you don't feel like doing all that, you can just go to this website and they'll do it for you. What the heck? What am I doing? Oh, it's 6 times 2. Sorry, 6 times 2. So 12. There you go. All right. So hopefully it helps. Greatly appreciate your time. We're about to go into session number 2 right now. Right. So if anything, just use this website. You don't have to think too much. So it's myfxbook.com. Helps you out. Right. So session number 2 is about to get on right now. What I'm going to do is I'm going to put in the box right here how you can be able to get access to session number 2, right? Events. What the heck? How do you get? I guess I have to log off to show where session number 2 is. Anyways, so I'm going to log off right now. Figure out how to get session number 2. I'm going to put it in our Telegram. If you're not in our Telegram, I'll definitely encourage you to get in there. How can you do it? Go to our YouTube and get into there. About to get onto session number 2. Session number 2 is going to start at 10 p.m. sharp. Right? We're going to get into the markets together. Get into some trades, hopefully, if they're available. I don't, push or anything. And then from there, right after that, I'm going to be giving away 5 one-on-ones to people. How are they going to be able to win? Well, there's a begin here tab. If you were to click on that begin here tab, there are sets of playlists. It says right here, win a one-on-one coaching with Philip, and I give them away every first of the month. Well, the next one's going to be today. It's the second, but it's going to be done today, right? And I'll go over more details later on that specific video. See you on session number 2, and let's get it.